All right, hey there. Good morning, everybody. Christopher Inks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 16th of August, 2022. Coming at you live from a kind of a cloudy day out here in Bernie, Texas. Hopefully, you guys are doing all right. Man, oh man. So, crypto Twitter getting really kind of bearish, right? Quickly. I don't know, guys. I think a lot of it has to do with understanding market movement, price action, stuff like that. And so if you don't have a good handle on Elliott wave theory, I think it leaves you to be a lot more fearful because, again, we get fear from the unknown, right? That's what we're scared of. It's not so much what we know, it's that unknown, right? And so when it comes to market movement, not understanding what the options really kind of are, I think is the fearful thing. And so crypto Twitter then, and crypto Twitter is such a just a closed in kind of area, right? And so you see everybody talking about, either all bearish or all bullish usually. And it's hard to keep your brain, again, it's hard to keep your head straight, to keep your brain from like frying out on you, right? And especially if you're newer trading, you don't really know what's going on. You're into crypto Twitter looking for somebody to kind of make you feel better, right? And then you've got everybody kind of talking bearish, and you're like, oh my gosh, and nothing's actually happened that says you should be looking below, that 17.6 or so area swing low there from June. Now, it doesn't mean you can't go down, but at this point, everybody's like out of their rear ends, scared of this and promise you it has to go down. And we haven't even barely moved. We've just kind of pulled back locally. So it's pretty interesting, as always, to watch. So we'll take a look, and to see out there. We'll take a look at that here in just a bit. Stocks, getting up there, that 50, 61.8 on those indexes, depending which index you're looking at. Their daily Stochh RSI is topping out there. RSI is up and overbought. We'll see if they've maybe made enough forward, to start pulling back. It seems like we're getting, it's barely moving up now. It's just a little bit higher and higher. We had those crazy daily candles a few days back into last week. I think it was Thursday or so, and they looked, really likely to kind of be the top there. And the next day, it kind of pushed up a little bit higher, and so. Still trying to see if we can see if it's just edging itself out. If we, excuse me, if we think about it, a lot of the market participants right now, a big percentage of them have never been through an actual, recession or a downturn in the markets, right? So the last one we had was 2008 going into 2009, right? Bottomed out around May or April of 2009. And ever since then, we've had this secular bull market, right? And so, we've had crypto, which, Bitcoin came out about that time, right? It's only known a bull market. Your stocks and whatever, they've had some pullbacks. We had the March 2020 thing, but that was pretty short-lived, even though it was a pretty big, quick drop. But nobody's had any kind of real extended downturn, right? I mean, now crypto, you maybe argue you can there a bit. With its whole cycle thing, but we're talking about big, not just one specific market kind of pullback, right? And so if you look at that, I think that does a good job of explaining why we continue to have money still flowing in the market. Everybody's still thinking it's by the dip. It's always by the dip, right? Now, is that going to translate into a new high? In stocks and whatever, I don't think so, but, I'm still open to that possibility for sure. Bitcoin, I think we probably will. But, again, open to the possibility we don't. The last thing you want to do as a trader is just become so stuck in what you think is going to happen that you can't, fathom the possibilities otherwise. You have to remain fluid. You have to be willing to trade in and out of positions, guys. I think the further out your thought is, I think the more likely you have to be willing to give it up. So you can have these ideas about what you think is going to happen over the next year or 5 years or whatever, But you have to give them a lot more likelihood of not panning out as you would something, an hour from now. You've really got to do that. But I tend to see the different thing, especially with newer traders. They make these, they're like, oh, well, Bitcoin's going to go to 100,000, period, right? Or stocks are going to make a new all-time high, period, right? And so, those are much further off. And so while they could and possibly will, the idea that you hold so strongly onto that in spite of maybe other information coming in, I think really kind of ends up setting you up in a bad way. Being a trader, guys, is just about, yes, you can have your ideas about what's going to happen overall and longer term, but really it's about today. If you're a trader, it's about today. What's happening today? Tomorrow, new information may come in that completely makes what you think is going to happen in a week obsolete, right? You have to be ready to understand. You have to be able to recognize that and to be willing to flow with that. If you watch crypto Twitter, and maybe you might have done it yourself, people, the first time something doesn't happen out exactly as they think it will, they're like on you about how dumb you are and how stupid you are and how wrong you are, right? And it just goes to the mentality, right? It just shows you, when you think in terms of trading, how mature are they? And so, again, this isn't about, I'm not saying that they're immature or whatever. I'm just saying that their actions relate to how mature they are in the field, right? In what we do. And when you get that kind of silliness, that shows that they're very immature. They're at the beginning of their trading life, basically. Because as you get further on, if you're doing this right, guys, which is the only way you stay in for any length of time, right? You pull away from it. You don't keep acting like that because you understand how much more fluid trading actually is. So I keep trying to help you guys and let you recognize that even if you go out there and you say something publicly, don't worry about if you're wrong or not. Just be willing to change your opinion of what you think may be happening if new information is coming in. Do not be scared of somebody saying, oh, well, look, you're flip-flopping or something like that. Who cares? It doesn't matter. They have no claim on your account. If you're trading, they have no claim on that money there, right? They don't have any claim on your bills. Don't worry about what some Yahoo online is saying. You guys spend way too much time worrying about that. And I know I talk about this often. It's because you guys keep DMing me about this, right? And so a lot of trading is just getting your head on straight, just getting the mental side of it. That's the hardest part of trading, guys, okay? The mental, emotional side. So we got all that going on. What else we got? We got, here in the U.S., we've got midterm elections coming up here just in a few months. We've got the student loan pause supposedly supposed to be done with, toward the end of this month, right? But, is that political suicide for Democrats, and I think it probably is. I think especially with all the, the higher prices, the inflation and whatever happening, that everybody's going to blame on those who were empowered, right? And so for right or wrong or otherwise, Democrats are in power, so they're going to get the blame for all that. So people are in pain, people are hurting. The market, the housing market, soared up there out of reach and everything. Now interest rates are flying up really high, right? And so all this is going to be put for blame on the Democrats, right? So I don't know. I think they've got to extend it at least one more time to get them through those midterms. But, we haven't heard anything either way yet. Usually within a month of the expiration date, Biden would come on and say, okay, well, we're going to extend it for another couple of months or whatever. But we do know that the White House told, servicers to stop sending out notices about it, right? So there's that kind of idea going on. So I think that could be interesting, especially, again, with the passage of that, Congress passes some of the dumbest stuff, right? But they name it things that you want to hear so that you go, oh, yay, Inflation Reduction Act. Oh my gosh, that thing's so funny. But anyway, so, they've got these kind of things going on and, all this. And so I think it's going to get interesting still here. And why do I bring this up? Because, again, we're talking about, when you're talking about trading or investing, you're talking about money outside of people's bills, right? And so you've got prices all rising. You've got interest rates rising. You've got potential student loan moratorium being lifted and, going back to payments now. And all these things affect, you got rent going up to crazy levels, right? And all these things affect how much free money people have to be able to, to put into the markets. And that's important because at the end of the day, if there's no money going into the market, where's the market going to go, right? So I think these are just definitely some things to watch as it is. We'll see, right? We'll see. So much going on. Who's here already? Let me see here. We've got Nevlugia and Sylvia. What's going on, guys? Hank is here. He says he's half there because he also needs to keep an eye on his pork belly in the oven. In the oven, man. You got to throw it in the smoker, man. That's how we do it over here. Deadly12, what's up, man? 1, 2, 3, over there. Andrew checking in. Bamboo, good to see you. Checking in from Zurich. He says it's a sunny day out there. Great to have you checking in, buddy. Jared the Great, what's up, man? You said you're smoking a butt and ham tomorrow once the rain lets up? Nice, man. I love hearing this, guys. We're big, big barbecuers over here. So I love hearing about it. My dad, he's retired now, and that's his big thing, right? So online, he posts 2 things online. He posts his political thoughts. And my dad is, 70 plus years old, retired military. He's got some, he kind of reminds me, I love my dad to death, but he reminds me of Clint Eastwood in Gran Torino. Get off my lawn. So anyway, he posts that, and then he posts all these pictures about all these smoking and grilling and stuff that he's been doing, which, man, that's great stuff. But anyway, love that y'all are doing that. Dana, what's up, man? He says there's a difference between a good trade and good trading. Definitely. Guys, remember, one trade does not materially change anything. As long as you've got proper risk management, one trade, whether you miss it or whether, you take a loss on it, is not going to materially change anything. And even a couple of trades won't. As traders, you have to understand you're going to miss a lot of opportunities. Stop trying to stay up till 3 in the morning, trying to get in on a certain trade or something because you're scared you might miss out. Guys, take trading like a job. Give it a certain hours, If you're going to just trade from 8 to 5 or something, just do that. Don't worry about anything else. If you're a trader, there's going to be options to long and short every day, just about, guys. Okay. So yeah, well, there's going to be every day, but you just have to find the right trades, right? But I mean, there's always opportunity. So stop, driving yourself nuts and wearing yourselves out trying to stay up 24/7 to do this stuff. Okay. Let me see here. Jonas, what's up, man? Good to see you. Edward Park checking in here. He says most crypto Twitter is extremely bullish, especially the big crypto YouTubers. See, I see the exact opposite. I see a lot of very bullish, especially among the big names. So see, it really depends on how your feed is curated. Remember, guys, your feed that you get is not necessarily the way the market feels. The feed that you get, curated by Twitter or Facebook or whatever is all that AI stuff, right? And it tries to feed you what it thinks you want to see. It doesn't mean that you necessarily agree with it, but just what you want to see, because the idea is to keep you on the platform longer, because the longer you're on the platform, the more money they can make off you. So, my feed is definitely opposite of that. It's extremely bearish on there. So, we'll see how it all goes, right? Wazobia Dollars, what's up, man? Matthew checking in here. J.W. Smith checking in from Houston. He says, where we're all bullish, but actually bulls, as in livestock. I love it, man. I love it. Lawyer Tom, hey, what's up, man? Says, new subscriber in Dallas, just saying thanks for your thoughtful analysis. Man, thank you for saying hi. Glad to have you checking in, man. Let me see here. Hank says, agree, Chris. How long have you been holding on to your big recession bias? Maybe time to revisit? Nah. Nothing's changed. Nothing has actually happened that says that should change. But, again, my idea of, and it's not even recession. Remember, my idea is actually a big, large depression. But it's on a much grander time scheme, right? We're talking about 200 and somewhat years, right? So it's a much longer term outlook. So that's why we continue to trade up along the way, right? Make money. I mean, again, with our signals, been making money, with coin and what do? We did NET and we did ALGN, and we're up with MU right now, MU, Micron. We've got RIDE, we've got looking for an entry in the New York Times. So, I mean, we're still no problem going long. That's just the bigger overall picture. Which, guys, remember, even if the stocks, if the indexes themselves end up coming down and the market as a whole comes down, there are still going to be stocks out there that are going to do all right. I keep bringing you guys back to 2008 when Dollar General, I think it was Dollar General, right? Just had banner years coming out of that, right? Or through that, right? Where everything else was kind of coming down and they just, kind of continued going up. So yeah. But you always have to keep, again, an idea of your time frame. Again, my idea of this potential depressionist thing is, based on a 200 somewhat year timeline there happening, right? So it could take longer to pan out, which is fine. I would prefer, I'll be honest with you guys, I would prefer if we went up a bit higher first. It's easy to make money when the markets are going up. It's so easy to do that because the market of retail traders and the market of money managers who need to put their money somewhere, instantly put it in. So it makes it easy to make money when the market's moving higher. So I wouldn't mind doing that for a few more years and, putting off some kind of big depression thing for a bit and make enough money to buy an island or two and then kind of not worry about it, right? We'll see what happens. Oscar, what's up? Yeah, I saw Bed Bath & Beyond popped. And there was another one too. It escapes my head at the moment here. Rallying up higher there. Sure. Definitely some good opportunities there as well. Anderson gave Newman $350 million, so I guess we're not in a recession. Yeah, it's funny how that all works, right? Let me see here. Deadly123, man. I appreciate you, buddy. Thank you, sir. I do appreciate that. Yeah, your emotions. Guys, I keep telling you, when you first come in as a trader, you think that it's going to be Wall Street, or if you come into crypto, you think it's going to be the big whales that are what takes your money from you. But really, it's you. You lose your money. It's your emotions. It's how you get all bent out of shape. That's what loses your money. You are your biggest enemy when it comes to trading. You do more damage to your account than anybody else out there, guys. Wall Street and big whales don't really have a whole lot of say in it. And what's interesting is I've noticed, God, especially lately, there's a lot of talk. People talk as if there's one person out there who's manipulating the market and screwing everybody over. Guys, come on now. The market is the market, okay? And what you have is groups of larger individuals, professionals, who are moving sometimes in tandem, which gives the effect that they're working together to screw you out of money. It's not what's happening, guys. All right? It's not like Joe calls John, who calls Beth, who calls Sarah, who calls Glenn, and they're all, I don't know what those names are, but anyway, and they've all got these big amount, these huge amounts of money or product or whatever, or, shares or whatever, and they're all going to buy or sell at the same time. That isn't how it works, guys. The sooner you get out of this idea that somebody's out there manipulating the market, the better you're going to be. People are going to try, sure, and sometimes it maybe gets a small little knee-jerk reaction, but in the grand scheme of things, guys, the market determines what's going on with the market. Okay? And so even if you're thinking about Wyckoff, you talk about the composite man or the composite operator, that's just something that just refers to that effect. It's not that there's actually somebody out there screwing you over or manipulating the market. That isn't what it's about. And I think a lot of people that don't really study Wyckoff, they just kind of glance over it real quick. They think that there's somebody out there actually doing that to them. And so, unfortunately, it is what it is, right? Exxon, what's up, man? Dancer Eddie checking in from Florida. Who else we got here? Blaze is coming in. Good to see you, man. You got to love and respect the old timers. They know better. Talking about my dad. Yeah, I don't talk politics with him anymore. I love him to death, man. But, people have their opinions about things based on, how long they've been on this planet and what they've done in that time. It is what it is, right? Smokers in cities' apartments aren't appreciated, Hank. That's why you're not smoking it? Oh, man. Okay, I got you. Poison, what's up, man? So anyway, guys, hey, listen, you can join us here at howtotradetowin.com. We'd love to have you there. I've still got this going on. I'm not sure how much longer I'm going to do it, but we're giving you a 50% off Tier 3 annual. And if you do that, and you just have to go to our site, howtotradetowin.com, and go in to join us, and then pick that Tier 3 annual. It'll automatically, price will already be 50% off there. And once you do that, and you follow the instructions on the email you get to sync up your account with the Discord server, once you get onto Discord, just send me a DM, and I'll set up your account for 6 months of signals. Whether you want crypto, stocks, or Forex, your choice. You jump in there and do it. We've had a great couple of weeks here. as we've launched this, and look to continue to do even better. So, man, oh man, we'd love to have you there. Great way of getting in, and we do this because, guys, at the end of the day, for 5 years, I've been out here telling you that the most important thing is to learn how to trade, and I mean it. So even though we offer signals, I still think that the best way to do it is to learn to trade yourself. So there you go. That's what we're going to do there, all right? Hopefully you guys will join in on that. We'd love to see you there. Say hi. Fun times, good stuff, right? Let me see here. Poison says, if stocks dump, I think crypto will follow. We see that on the COVID dump. Again, potentially. But, there's a lot of, if you accept, if that's your default view, you have to accept a lot of givens. And I'm not willing necessarily to do that. Doesn't mean I don't think it can't go down. But I do think there are things also happening, with crypto that could keep it afloat longer. So we'll see what happens. Definitely trading to trade, right? I'm not buying a position today. I mean, I've already bought my position today back in June to hold for the longer term there, right? But, right now I'm trading day to day. And so, I've got my eyes higher based on things. But, the great thing about Elliott Wave is it doesn't tell you where price is going to go. It tells you where price could go. And it gives you confirmation levels along the way and invalidation levels as well. And in doing that, as price, moves and does its thing, you're more aware of what could happen, of where it could go. So you're not so worried about, oh my God, is the stock market going to dump? And then is that going to cause, crypto to dump? Yeah. And so it just makes it a lot easier to trade. You don't have to stress out so much about it, right? Let me see here. What's going on, Mr. Wilkes? You'd be happy just to afford a new car? November 2021 wasn't a great time to start buying crypto. Yeah, but a lot of people did it. That's what usually happens, right? People buying toward the tops. They did it there. They did it around April. Yeah, and then they started selling around May and June of last year. Or of this year. Yeah, so not so good, right? Mark, what's going on, man? Better late than never. Brian says, could exchanges counter trading investors move the market, though? What do you mean exactly? How do you mean move the market? Let me know what you mean there. Yeah, manipulation can happen in illiquid markets, sure, but and I always warn that with the shit coins, right? The really low cap ones. Yeah, they can rally up, 10,000%. But first of all, is there going to be liquidity up there for you to exit? Everybody has these grand ideas. I've talked about this before where, they're like, man, if I put $100 in here and this thing goes up 10,000%, I'm going to have all this money. Or $1,000 here and it goes up there, I'm going to be so rich. And then if it happens, they're like, oh my God. Well, one is, first of all, do they even get out? Most people emotionally are going to keep holding on. And when you rally up that quick, you fall just as faster, right? So that's the first thing. But even if they try to get out, then they're faced with point number 2, which is there's no liquidity there for them to exit. So, they end up chasing price down, pushing price down further, getting filled just tiny bits along the way. And what the hell? What was the use of doing it, right? So I think the best thing you guys can take from that is if you're going to trade something like that, get out while there's liquidity. Don't get out at the top. Get out as it's rallying up. Get out as new people are coming in. Because otherwise, if you try to get out when everybody else is getting out, who's going to buy your positions? Everybody else is getting out too. Let me see here. If they have the order book from their own exchange, they could essentially be their own market maker. I mean, so if you trade, let's say you trade Forex, okay? Forex brokers, unless you've got some significant count, they're often the other side of you, okay? You say counter trade, they're not really counter trading in that sense. They're just providing liquidity, right? Until you reach a certain level, 25, 50,000, whatever. And then they might give you access to the direct, what's going on with the real flows, right? But they're not going to manipulate it because what they're doing should remain in line with what the overall market's doing, right? And so it would be the same way with exchanges, right? Even if they could, they should be trading with the rest of the market. And so the way these market makers work when they're trying to provide liquidity is they run off indexes, and indexes are based on, multiple exchanges averaged together, right? Your bigger exchanges and whatnot. So yeah, I don't know that that's necessarily an issue that you'd have to really worry about, on that. Andre wants to know, don't they know the liquidation levels, for example, the stops? See, you guys are thinking, you're thinking really nefariously. And, these exchanges, reputable exchanges don't do this type of thing. Or they shouldn't be anyway. Again, it's bad for business, right? Exchanges, guys, the best way I can explain this is in the 1800s when we had the gold rush here in the U.S. over to California, right? Whether you were making money or not digging for gold, those who were selling you the shovels were the ones who were making the money, right? They were providing the means for you to do what you want to do. Think of exchanges as the same way. They make their money by providing the services for you to go and try to do your thing, right? They're giving you the shovels, or they're selling you the shovels, right? So they're not really interested in trying to manipulate price and do all these things like you're thinking in your head, right? They're making their money by selling you those shovels so you can go out there and do your digging, right? I think it's probably the best way to think about it. Don't get too caught up in these big these big conspiracy type theories or whatnot. I'm not saying it can't happen that somebody does something like that, but I'm just saying in general that isn't the way it works. And so if it doesn't usually work that way, then why spend your time worrying about it, right? You got to figure out what's worth worrying about in this world as you do things, whether it's with trading or just living life. You tried FTX and it seems slow, kind of lagging, like when I click the button to win my orders executed. Not sure if it's just technical differences. Yeah, could just be that that their engine is slow. Their order engine is slow. In which case, with as many, with the share of the market they continue to grow and to get more of, it's like any other web application, right? If you have a whole bunch of people on it, it's going to slow down. You have to beef it up. So it could be just that they got a lot of new people maybe in. It could be. Kimozabi, what's up, man? I see you there. Let me see here. Anything? Let me see. Any of us here? It looks like I've caught up with you guys here, more or less. Anyway, yeah. So Bitcoin. Here's what I'm looking at. A lot of sideways here. At some point you have to kind of figure out, okay, well, what's the idea of a count? And so, the first thing I want to say is that we've got all this overlap. Same thing I've been saying here, right? Let me kind of do this. We've got all this overlap, which is why everybody's talking about potential, wedge or something. It leaves itself open to a lot of interpretations, right? So if we back out of the whole Elliott wave thing, here's what I look at. If we drop down below here, we should be looking down here toward the S1. It's as simple as that. That's really my big picture thing, right? Elliott wave aside, whatever you think counts are aside, if we're losing, right now we're here. So basically, if we're losing this swing low right in this area, then we'll probably look right here toward the S1 pivot. Okay? If we break out above this swing high right here, you see where you've got all this support resistance right here? It's right here. So if you can break out impulsively above that, then that looks like a pretty good chance that we're probably heading up higher. Okay? But, again, if we lose this here, well, then we'll come on down here. Really, that becomes as simple as it is. Now, as I've continued to show you guys, you've got basically support resistance right here, right? And then you've got this range right here, right? And then within this range, even we've got now this support right here, which we're on right there, right? So it's not that, if this is a wedge, then you should have a sharp drop, okay? That's just the way it works. And we really don't have that, right? Because you've got all this support right here. So you've got a lot of sideways here, you've got a lot of sideways here, and then you've got a lot of sideways here, okay? Wedges most often are steeper. So you don't have a lot of sideways base building, right? Which is why most often, if you've got a true wedge, you'll just have a strong reversal and drop out of that wedge support. When it's done, right? You don't usually have the drop and then some sideways and then maybe a little bit of drop and then some side. You don't usually have that. It's a more pronounced definitive drop. Because again, if you think of what a wedge is, I talked about this last time, or it's the same thing as a symmetrical triangle, right? So if you've got you know what? I'm just going to do another chart here. Make a copy real quick. Because this is the chart I use for our peoples. I don't want to be messing it up for them here, right? All right. So here's the thing, guys. If you have a symmetrical triangle, right? So it looks like this, right? If this is a proper symmetrical triangle, then while you're going through that consolidation, right? I can't get this to pull. There we go. Right? So as you go through this, like this, right? So in this area, you're consolidating, right? Which means your volatility is dropping off. Your price action is coming closer and closer together, right? Your volume drops off. Your volatility drops off until you break out, and then it spikes, right? It's the wedge is the same idea. It's a consolidation pattern, right? So if you have a wedge, right? This is consolidation, same as here. Volume should be dropping off as you consolidate, getting closer and closer. Your volatility drops off, and then as you reach that top and you drop, again, like the breakout here, you should see this acceleration, right? Larger candle spreads, larger volume, acceleration coming down. You shouldn't see this kind of like just hem-hawing its way kind of down, up and down, up and down, up and down. Because again, you're talking about a consolidation pattern. It's a consolidation pattern. This is contraction before expansion, right? So yeah, that's what we should be looking at. Over here where everybody's kind of thinking this may be what do you call it here? A wedge here, right? Let me kind of put this to the daily here. So again, kind of like this, kind of like this. Maybe, right? Maybe. But that's what we'd be looking for, right? And it should, move down pretty rapidly. So is it or isn't it? Well, again, we'll see, right? If we're talking about Elliott wave, again, I've thrown this out here. Maybe A and then B is a flat, right? And then maybe A, B, C is 1, 2, A, B, C is 3, 4, A, B, C is 5, maybe, right? So you can get an A, B, and then your wedge is this part right here, right? But this wouldn't be part of the wedge. But this would be that wedge area, right? So we could have that. But again, big picture-wise, at least while we're above that daily pivot, our thoughts shouldn't be down to new lows. Now, if we break down through that daily pivot impulsively, then I think, okay, now you can at least start thinking about it. But while we're above it, there's no reason to even think about dropping below yet, okay? But even if we do drop below this impulsively, you should be, big picture again, you shouldn't be looking any lower than the S1 realistically shorter term, right? You should definitely keep in mind that you could get a reversal out of this S1 and rally back up, right? So if this was somehow 5 waves up, that S1 pivot is just around the 65% retracement. That's no big deal, right? That's a solid wave 2, right? You can see the 61.8 is just around the bottom part of this high volume node. So, realistically, might even get down there, might only get down to, the 50% or the 61.8 right here in this high volume node. Now, I think if you're dropping down below the S1 pivot here on the daily, which is right around 19,800, so, pretty close to that 20,000 area I've been talking about, I think if you're dropping down through there, especially impulsively, I think that's the real time you start thinking about, okay, maybe really going down lower. If you're thinking about lower from here, the best you're doing is luck if it does, right? Because you got to understand, guys, bullish market structure off the June lows, okay? You're above a major pivot, the daily pivot right here, right? It's all higher highs and higher lows, right? So there's nothing in here that says it has to go down. It says it may, but why would you be trading on Mays? Right? Well, why would you trade from here with the gold down here on a May? I'm looking for confirmations. There's nothing even happening here. There's no breakdown of the structure of this market structure at the very least to even suggest that we should head down lower. You guys get what I'm saying there? So I'm not saying it can't go down, but I'm saying if you're a trader, you have to understand at what point you really need to give things serious thought versus just, understanding that it could happen and watching for your validations or your invalidations. Crypto Twitter is it's definitely going down. And so what's going to happen is if it definitely, if it does go down and make a new low, they're going to be jumping around pounding their chest as if they did something special. When in reality, they didn't. They got lucky, right? Because if it pops up and goes up here, they're not going to be sitting there going, they're not going to give it the same respect that they would give it if it broke down here, right? That's what I'm trying to say. Because they don't believe that it can go up higher, right? See what I'm saying here? But nothing's happened that says it has to go down here, only that it's pulling back. So we've got major things happening, the bullish market structure off June low, the daily pivot that at least are saying, listen, until we're doing down below these things, it's a possibility it may go to a new low, but I have no confirmation saying that it needs to. I'm just putting my money in and hoping. Does that make sense, guys? I hope it does. A lot of times I talk about these things and new traders are still very emotional and very, which means they don't really think through it fully. And it's hard for them to kind of grasp what I'm saying until they allow themselves to. It's not that anybody's idiots or anything. It's just that when we're emotional, it tends to cloud our logic, right? And there's no reason you should be trading emotionally rather than logically in the markets. Let me see here. Jonas, yes, I will respond to your DM, buddy. I will respond to your DM. Yes, sir. Let me see here. Andrew thinks that the range is building a strong base. I mean, again, if I'm looking as a trader, if I'm looking at the chart and I say, okay, base on top, I mean, I have to default to the idea that it's a pullback versus a reversal. But see, here's the thing. Again, people that aren't doing this logic, they'll say, okay, reversal definitely here. And if it ends up going down below a swing low there, again, they'll beat their chest really loudly and act like they did something special. But new traders will get caught up and they'll say, oh my God, yeah, you're like amazing, right? The problem is that doesn't last. And so what happens is you end up, when they do this, there comes that point where they're going to be wrong. And when they're wrong, they're going to continue. They're going to double down and double down and double down as they're wrong, as they continue to be wrong, which is going to mean that you as a new trader are going to do the same thing, probably to a greater extent because, again, not really understanding proper risk management, all these things. And that really sets you up to lose a lot of money, a lot more than you've made. So, again, it's the difference between, being logical and understanding validations and invalidations and stuff like that versus being emotional and just saying, oh, well, it's definitely doing this or that and guaranteeing and stuff like that. God, I just know for some reason I have new people in here that are going to walk out of here and say, well, Chris said that it's definitely this or that. And definitely what I'm not trying to say. Just trying to get you guys to remember to think through it fully and to be logical about things. So yeah, I mean, so right now could potentially be some sort of wedge. Or it could be an A and a B as a flat here and then a wedge as a C. I'm looking right now until, it's kind of telling us otherwise. Let me kind of zoom out here a bit. So here's my kind of count at the moment, okay? So I've got this as a 1, 2 flat here now, right? So I've got this as a 1, 2, 3, 4 is a triangle. 5 could be done, or this could just be a leading diagonal for wave 1 of 5. Okay? Now, if we say, okay, let me do this right here. If we say that this is 1, 2 here, right? Per the count I've got on there, right? Well, wave 3, we're looking for a 1618 extension, right? So we're right there with this. So, again, this could be a triangle. This could be 3 here. This could be 4 in progress, right? I mean, 4 is a triangle here, right? Because we're pretty close to it. We're pretty close to it. Let me see. I'm going to try one more time. Yeah, so, we're pretty close to that 1618, right? So then you get your triangle going here, right? So that's basically what we're looking here. So a little bit further back here, right? CDE. And this wouldn't be a diagonal here because your triangle ends above where wave 1 ends. So it's an impulse. 1, 2, 3, triangles 4. And then again, potentially, a leading diagonal is a 1 of 5, right? So what does that mean? Well, it means that if we drop down, let's see here, I guess it's actually this right here, right? A, B, C, D, E, yeah. So on this here, right, if we drop down below the triangle support here, that's 22,669. If we drop down below that, that says, okay, well, this is likely 5 here, right? So let me draw this out here. I've got this kind of, actually, I'm screwing myself up here. Let me see. So this goes 1, 2, 3, 4, potentially 5 here. We'll do that. Sorry, guys. I'm just kind of confusing myself here. And so, again, you have this here as A, B, C, D, E, right? Okay, here we go. So what I just tried to say for about 5 minutes there, let's just try from here. Let's get on a cleaner chart here rather than the other chart. Okay. So your line in the sand for this particular count is this drop, this swing low here. If you drop down below wave 4, then that says wave 5 is done. And this is 3, right? Now, again, we'll go back up here, and now we'll do it like I did at the very beginning. All right, there we go. And so you can see, I've got it pretty close there. You can see that we just about hit the 1618. So again, could be 1, 2, and then 5 done here, right? But right now, until we get this breakdown here, we're looking at the possibility that maybe we've got a leading diagonal going off here as wave 1 of 5, right? And so in this case, you have wave 4, and then you go, okay, well, this is wave 1, 2, 3, 4, 5 will head up, right? And so then that gets you, to your 5 and your 3 now. And so if we look at where this actually gets us, it basically gets us into this blue supply structure that I've had here for weeks, guys, right? We've talked about this for weeks. That 27,000 to 28,000 and a half kind of area here. So that's actually where that takes us to, right? And so, of course, then you would have your 4 and your pullback, and your 5 takes you right up basically to the top of this range here, right? It all makes a lot of sense, right? You kind of finish out 5 waves into your resistance here. If nothing overextends, beyond this, it just keeps doing it, right? So what does that mean? Well, that means right now, until we break down below this swing low here at 22,666 and 23 cents, for me, it says we could potentially head higher up, right? So then we just look at, okay, well, where are we at? and we say, okay, well, we've got this breakdown, a lot of overlapping price action, which again is usually indicative of correction, right? And so we have an initial target here of 23,511, which is our S1 pivot on the 15-minute. And it's also the 61.8 retracement. So if this is one is leading diagonal, then it's the 61.8 retracement, golden pocket, right? Wave 2. Secondary target is the 1 hour or 4 hour S1 pivot here, right around that 85.4 retracement at 22,964. So that's what I'm watching. I'm saying if we continue to break down here, there's the first target, there's a second target. I'm looking for an impulsive breakout above the 15-minute pivot. That to me is going to be the first likely clue that, hey, wave 2 is probably complete. And then we'll look for a breakout through the swing high to say it is, and wave 3 is in progress. Again, looking up here at 27,100 or secondary target of 27,639.25, which actually gets you right around the EQ of that. So, I mean, really all this sideways, it breaks down to that simple. Now, does that mean that this has to be this count? Not at all. Not at all. But until it breaks down below this triangle support here, it's possible. If we break down below that, then we look and go, okay, well, what may the count be now? And then we look at maybe a different count. But on that larger time frame, again, if we're breaking down below this swing low, our target initially is the daily pivot right here. Right around that 22,265 or 270 kind of area. So, I mean, it's pretty easy. You've got your targets, you've got your validation. I mean, you've got all this set up. It's pretty easy to just trade within it, right? And like I said, if you do break down below that triangle there, then maybe this isn't a triangle. Maybe this is a 1-2, and somehow this is a leading diagonal here. But in that case, it's still, it could be that ABC, or, it could still be potentially a 1-2, 1-2 if we're heading up. So there's nothing there saying it has to be a top. See what I'm saying? So, I mean, it's the same way that we found reason to buy here, that we found reason to sell here and buy here, and always in opposition to the rest of the market, right? If you guys have been following me, you know this is what we've been talking about, right? Same reason we found to buy down here at about 4,600 when we had this drop and rally back up, did that live with our Discord members. Again, same reason we found to buy the bounce here, to sell here, to buy here, to continue to rally through here, and then to sell up in here, right? All these things we've done publicly, right? And so, often opposite of what, generally crypto Twitter is saying, right? So we'll see what happens, but it's because we don't take this approach. We don't zoom out the weekly and say it has to do this or that. We understand the possibilities, but until those larger term levels are done. I mean, here's the thing, guys. Think of it this way. If you're thinking about a lower low below here, you're thinking more along the weekly time frame. You're thinking of this right here. Okay? Which means if you're not breaking down through weekly levels, then you shouldn't be looking further lower, right? You shouldn't be looking at the 15-minute time frame to figure out what it's going to do on the weekly. Okay? Does that make sense? So, if you're looking at the daily, if you're trading the daily or, the 4 hour or something, I mean, this is all bullish market structure here off that June low. So, your default thought process should be to buy in the direction of the trend, and the trend is up from June. Higher highs, higher lows, bullish market structure. Until that breaks, your thought process should be buying the dip, not selling the rallies. When that breaks, then you can look to sell the rallies locally, right? Until you get bigger breaks, right? If you're looking for a breakdown below swing low, though, here, you've got to be trading your weekly, guys. It makes no sense to trade your dailies because your dailies are bullish off the swing low. Now, what I'm explaining to you here is one of the biggest things that you can get clear in your head to make you a better trader, guys, to make sure that you take less poor trades and have more opportunity to make money, right? You trade in the direction of the trend based on the time frame you're on. But you still should understand what the larger time frame's doing. But when you're trading, you trade that time frame. Stop zooming into a small time frame to get some kind of confirmation bias on some larger time frame that it has no real effect on. Your 15-minute chart does not determine what your daily chart's going to do. Okay? Your daily chart does not determine what your weekly chart's going to do. It could give you a hint as what may be coming up, but until it happens on the weekly, you're still tossing dice. Okay? Let me see here. So that's what I'm trying to say, guys. None of what I just said there said that price has to go up or it has to go down. What I'm talking about is structural framework understanding for trading. If you're doing anything else, you're likely losing a lot of money along the way. If you're just starting and you're doing something else, then you're likely going to lose a lot of money along the way. Trading is about systems, not about individual trades. And because trading is about systems, it's also about structure. Right? Structural understanding on the time frame that you're on. Again, the only reason people generally look at significantly lower time frames for their larger, so if you're looking at the weekly, but you're zooming into the 1 hour, the only reason you do this is because you're trying to get some kind of confirmation bias. Because if you're looking at the weekly, how many hours are in a week? I honestly don't even know. 60 is, what is it, 24 hours in a day, 7 days a week? So 156 hours in a week? So you're looking at the hourly chart to figure out what's going to happen over the course of 156 hours. Makes no sense, right? Makes no sense. So, yeah, just some things to think about with that, guys. Again, it's about understanding that it's your system, not a single trade, if you're a trader, okay? That it's about structural understanding versus, trying to, again, create confirmation bias by zooming into a very small time frame for a very large move. Okay? What if we break E? Well, that's what I said. If you lose E here, then that invalidates the count that I've got going here. And you get a target right here of initial target anyway of the pivot here, because you want to see, okay, so how does this count look coming down to it? Now, just because it breaks this idea that this is 1, 2, and 3 maybe, right? Which it could be, actually. It doesn't even really break the count. It doesn't. So here's the thing. Again, this is almost the 1618. So this could be wave 3 here, okay? So what we would look at then is we go, okay, well, if it breaks down below wave 4 here, then that means this is not wave 1 of 5 of 3. It means this is wave 5 of 3, okay? So wave 4, we should expect the 38.2 or the 50%. 38.2 is right here at the bottom of the triangle, this kind of congestion area right there above the pivot. Wave 4 usually pulls back into wave 4 of the lesser degree. This whole triangle is wave 4. So if you pull like the 38.2 or the 50%, you're still in wave 4, right? I would, if we're dropping down below the 50 here and we start getting closer to 61.8, then I would say maybe this is a 1, 2, 1, 2, or it's an A, B, potentially a C. But if it's going to be an A, B, C, we definitely need to see it coming down further than just, this S1 pivot. If we're breaking down through the S1 pivot through the 78.6, then I start leaning toward the possibility this is an A, B, C. So you see, you've got levels along the way that change maybe the count, but not what's going on, because your price still remains actionable to the upside. Potentially, right? It's just the further you go down, the more your trade, the more your the fluidity kind of moves away from that idea and toward the idea that maybe it's an ABC. As I've been talking about a lot lately, guys, trading is about being fluid. It's not about, prices definitely going here or here. It's about, I think it might go here. And so as it moves closer to the level, gets to those invalidation levels, there's more support for that. As it moves away from it, there's less support for that. That's what it's all about, guys. Okay? So let's see here. So that's what we're kind of looking for. So again, if we reverse prior to the wave 4 swing low here, then we'll say 1, 2, looking up for, 3 heading up higher, right? 1, 2, 3, 4, 5 kind of doing its thing. Getting up there, right? I can't even do this here. If we continue to break down below that wavy triangle there, right? Then we'll say wave 5 is done. This was an ending diagonal for wave 5. So wave 3 is done. And we'll be looking for wave 4 initially at this 38.2, 22.466 to the daily pivot, that area right there. Secondary target of the 50%. If we continue rolling through that down here toward the 61.8 to the S1 pivot area, then I'm going to start looking at maybe we've actually got it as a 1, 2, 1, 2 heading up. In which case wave 3 will overextend and head higher. If we continue breaking down below this S1 pivot, especially impulsively, then I'm going to look at the idea that maybe this is more likely. Yeah, I'm going to revisit the idea of this being an A, a B, and a C. So you see how easy that is? You've got the levels where you're looking at and what you're going to be likelihood of what's going on there as far as where it may go. It makes it all a lot simpler, doesn't it? Versus, oh God, we hit this, we're coming up here to the weekly S1 pivot. We're up in this area, the previous swing low here. So we definitely have to go down. Because if you're thinking you definitely have to go down, you may just have a pullback as the initial ones and do it. Otherwise, you can trade it. You can trade it down toward those levels. And then if it reverses and breaks out through those validation levels that it's going higher, well, then you can trade up. If you're just selling right here thinking it has to go down here, you don't have any other options, right? In your head, you've set it up that you are definitely bearish from here to here. So if price goes down here, instead of being able to take a profit, you're going to let that come back against you and hope that it's just a dead cat bounce before it heads lower, right? Just a pullback before it heads lower. And what's most likely going to happen is it's going to break out above where you entered, and you're going to still hold on because at this point you're losing money. You're thinking, God, I can't lose this money. It has to turn around until it liquidates you, right? Which way's the better way to trade? Which way makes more sense? See what I'm saying? Let's see here. So let me get on here real quick. It's already 12 o'clock. Let me jump ahead here real quick. Let me see. What do we got here so we can check? Because we missed a couple of charts last time. Let's look at the DXY here real quick. Again, big picture kind of sitting up here. We've pulled down. We rallied up into the daily pivot where we're finding resistance, right? Made a slightly higher high over this previous one from August 5th here. Again, could be maybe ABC is 1, 2, ABC is 3, 4, ABC is 5, and then A, B, C up here. We've rallied. Let me see here. Depending on how you want to look at that, I'll make sure that that's actually wave 3 will work there. That would have to be wave 3, which means that cannot be the shortest. And it's longer than wave 5, so we're going to have to check wave 1. So, look at this bigger picture here. That could be a leading diagonal down, right? And this could be a B up, which would actually get us to almost 50% retracement, high volume node, daily pivot. A lot of reason why we could see a reversal at this point, right? Let's zoom into the local count here. So I've got that's exactly what I have here. Yeah. So I've got this as a leading diagonal down, and then again A, B, C potentially here. I want to see this. So what happens? Well, if we break out above the swing high here, I think it suggests that this is 3, this may be 4, or this may be 3 and 4 of 5. Going up there. But we'll tackle that if we break out above here. Right now, we're going to look and see, okay, do we get a breakdown? So we're getting rejected around the daily pivot. This is a pretty good rejection. Big candles coming down, right? And so we want to see, do we get a breakdown below? So the breakdown through the local support here, this hints that maybe wave 2 is complete. Breaking down especially impulsively here around this kind of pivot, this little swing low right below it. That will give us the first real clue that wave 2 may be complete. But we need a breakdown below wave B at 104.646 to add confidence to the account. Say, okay, wave 3 is in progress. You know, down here maybe to 102 or something like that. Okay, so that's all we're looking at right there. You know, again, if it continues rallying to the upside, we want to see, does it break out above the swing high? If it does, again, that leads us to further upside, most likely. Okay. So coming in with the NASDAQ, let's see here. Just gonna pull this up. All right. So I made a comment last Thursday about the idea that I thought maybe we'd have a start seeing down, because we had on the NASDAQ, it's this candle right here. You see how it gapped up and then bearish engulfing right here? So again, what that candle tells us is that at the beginning of the day, demand was in charge, right? It was good from the previous day into that day, and then it just had nothing left to finish higher. Most often when you get that, it's going to continue lower. Instead, it did push up higher and pushed up, and it hit our initial target here at 13,118.5. If we continue to push higher, we'll look here at the 61.8 at about 13,765 or so. That'll be that next target if we continue pushing up. You know, again, right now we're kind of looking at this as a possible leading diagonal down here, right? So 1, 2, 3, 4, 5, and then A, B, C, 50%. So we're going to see, do we do this? I mean, this is, you know, again, finding its way highly up there here on the daily. So what do we need to see? Well, our first hint that wave 2 may be complete is a breakdown below 12,438.86. Now you do have this bit of this island forming here, so you've got this gap up. If we were to gap down below this, through this area here where there's a gap between the rally and the decline, that would leave this as an island reversal, which is kind of rare and usually pretty significant. So we'll see, you know, again, but we have to get a breakdown first below this. Breaking down below the daily pivot is going to actually be the first real clue that wave 2 may be complete. But again, we need to drop down through wave B there at 10,850.01 to add confidence to the count and say, okay, wave 3 is in progress. If the count is correct, and this is a 1 and this is a 2, even if it's heading up here to 61.8 before it does, which is just going to be wave 4 of wave 3 there, right? If we get this as a wave 3 coming down, this is going to be harsh. Right as you get to this area, it's going to start kicking in harsh. And there's going to be a big drop off here. A lot of miserable people out there. But I'm also open to the possibility that maybe this isn't the top. Maybe there is further upside. But again, until we start looking like 5 waves up rather than 3, well, you know, it's potentially still kind of, you know, leaning toward the downside there, right? So that's what we're looking for. You know, again, we want to see, are we getting 5 waves up here? If we're getting 5 waves up here, that increases, it doesn't guarantee that, you know, that we're going to make a new all-time high, but it increases the odds that we will. As long as this remains an ABC up here, you know, we should be still looking further downside overall, but we've got our levels here that we need to watch price drop through, which increases the odds that you know, that's a wave 3 coming down as we go through these specific kind of levels. Okay? So that is that one. Let me look here at the E-minis, right? Let's see here. Oh, where's my notes? There we go. That's the one from today. All right. Again, rallied up to my initial area here. You know, right up here to that 61.8 kind of area. So we were looking, our target area was the R1 pivot here on the daily to the 61.8, this range here. We've just about hit that 61.8. So now if we continue to break out higher above the 61.8, we're going to look up here at the R2 pivot, which is right around that 70.5. That'll kind of be our next target on the way up. Again, looking at as potentially an ABC, but if we end up looking more like 5 waves up rather than 3, that leans us toward the idea that maybe this might be the bottom here. We might get to a new all-time high. Again, I would be very excited about getting that way because, hey, it just means easier money, right? It means easier money. Everybody jumping in, everybody excited, easier money. But like the other index there, we need to drop through 4080.5 as the first hint that maybe we're complete. Daily pivot is the next move, and then wave B support at 3723.75 adds confidence in the account there, okay? Let's see, what's the other one? The Dow, right? Let's see here. All right. So again, same kind of target area here, right? Again, it's that R1 pivot to the 61.8. You may have noticed that the Dow is rallying up stronger than the other two. So my first thought, if I see that, is that because remember the Nasdaq is very heavy tech, and the S&P, which is the E-minis there, the ES1 exclamation point, right? Those futures that we watch there are heavy technology as well. Not as heavy as Nasdaq, but pretty heavy still. So if they're both limited to the upside, whereas the Dow is rallying much stronger, then it would suggest that tech is lagging behind the broader economy, right? That's what it would suggest, because the Dow is a more broad-based index, right? And so in terms of, okay, what is the economy doing? I mean, you want to see that broader-based economy, because what it means is more sectors are rallying, right? More sectors stronger versus just the tech sector. And so when it comes to your economy, if more sectors are rallying, are doing better, well, then your economy may be not doing as bad as it seemed, right? So again, next target up is this 70.5 at around 34,630 or so to the R2 pivot right up here, just a bit higher at 34,733 kind of area. That's kind of that next target as we continue to move up. Let me see here. Really, I mean, we can look for a breakdown here below 33,289.83. That would be the first one that would make me pay more attention to maybe the tops in. But realistically, you've got your more significant pullback here at 32,387.12, followed by the daily pivot. And then, of course, you've got to get down below wave B over here at 30,143.93 to add confidence to the idea that wave 3 is in progress. Again, on all these indexes, once by the point you're getting to this area here, you should see the selling start to really kind of pick up. Or you might see it 5 waves down into this area here, a little bounce, and then it's that breakdown that really kicks in. But it's once you're getting to this area here that you really should watch for the potential waterfall heading lower, because that would be wave 3, right? We're coming up to the weekly pivot. That's all fine and dandy, but here's the thing. You went sideways on it from 18th of January, the week of the 18th of January to the week of the 18th of April. So that's 4 months of bouncing up and down with it. 1, 2, 3, 4, 5, 6 moves back across there. What I would need to see because of all that, because it wasn't just a sharp breakdown and follow down lower, is I need to see a breakout above this swing high up here. Because this is all your resistance right here, right? And so you've got this swing high up here at 35,824.28. I'd really need to see a breakout above that, looking at the weekly here, to suggest, okay, we may be headed higher. Just look at the weekly. Again, had this been a sharper just breakdown, rejection, breakdown further, then all I'd be looking for is a nice impulsive breakout above the pivot. But you have this range right here across 4 months on your, that's a quarter of the year. A quarter of this pivot's time it's spent bouncing back and forth up and down over the pivot. So you want to see a breakout above the swing highs above that pivot. Really, not the local one, but the bigger one up here. So it is what it is. As you do it, right? That's what I'd want to see. Now, interestingly, so here's the thing. If this was to, here's the one caveat I'm going to give you for my thought that maybe this is the top, right? Generally, if this is going to be the top, there shouldn't be any gaps along the way, right? And we have this gap right here, which isn't filled. Now, there's attempted fill that almost does it, but it leaves me iffy now, okay? Because you got the close here at 35,911.82, and then you have the high up here at 35,824.28. So basically, 90 points lower than that swing low. There's a gap there, about a 90-point gap. So that does leave me definitely cautious about the possibility that we're going to head lower here. I think it would be odd, especially if this was a major top, to leave this gap, because it would be, you know, the idea is it would be decades before we got back up here to fill it in. Doesn't seem very likely. Okay? So this is definitely my one big caveat on the idea that maybe that top might be in. So if you wonder why, you know, why I'm saying, hey, the top's in, but I'm, you know, open to whether it could happen higher. I mean, there's one of the kind of indicator things that I'm looking at that give me pause. That give me pause about further downside. Okay? So yeah, maybe, right? So we will see. It's not, it's yeah. There we go. All right. So there we are. Again, you know, you've got kind of a rally right in there, right? You've got this gap right here. So you've got this gap right here. If you look at the daily, which is between the 13th, it's the 14th of January. The 13th of January is up here. The 14th of January leaves this gap. So if you want to think about weekend gaps or whatever, that's a daily gap right there. So yeah, definitely open on that. And really, you can kind of consider this a gap in here, this long wick here, because that's an inefficiency. So on Friday, it drops down, rallies back up, and then on Monday, it opens up down here. Well, yeah, that's the weekend there, but on that daily, you've got that long wick there, which is an inefficiency, or like, as I've told you before, a lot of older time traders will call that a gap because it's inefficient. The market, it didn't really check that area. So that's what we're kind of looking at there. Let me see here. So yeah, so again, definitely open the idea we could be heading higher. And if we did, all y'all that are bearish on Bitcoin, I guess you have no more reason to be bearish on Bitcoin, right? I mean, if it continues up, new all-time highs there, right? So we won't have to deal with that anymore. Yeah, so good times, right? Let me see here. Silver. All right. Silver doing kind of what's expected. Looking for this breakdown further here. Overlapping a bit in here. You know, right now I've got this as A is complete here. Coming off this wave 1 down here for wave 2. I was looking at this today, though. I don't know. Maybe we've got an A and a B and a C, and then we'll have a D and an E, and then we'll have wave 5 of A finish up, and then wave B, and then wave C. So I'm still kind of open to that. If this is wave C here, this needs to be 5 waves down. So I would look for it to target this purple area here. But, you know, I think it should, you know, generally remain above the daily pivot for the most part. So if we continue to break out here, again, looking at maybe this is A, B, C, we'd look for 3 up, E, D, and then 3 down for E. So price has to stay below wave B, and then if this was to be the low here, it needs to stay above this swing low here for the 2 more waves, 3 up, 3 down, consolidating. Let me that break out higher. If we look at gold, let's see here. Yeah, I'm going to look at oil and natural gas in just a moment here. You know, again, same possible idea here. I don't know, maybe A, B, C, D, E. If it is a triangle here, I would expect wave D to be kept in check by the 1 hour pivot here. Wave E kind of pulls back to the 1795 kind of area maybe. And then we finish up for wave 5 of A. The other possibilities, we've got this flag going on here, which could be potential. Well, no, let me see here. Could dip down a little bit lower. Got a lot of wicks going into the S1 pivot there. But, 1, 2. So our, God dog it. There's ABC is 1, 2. ABC is 3, 4. Maybe ABC is 5. Nah, that kind of pops up a little bit higher there. So we'll just kind of look at levels here. Again, I was expecting maybe to come down here to 38.2. So if this count's going to be correct, then, I would look for it to come on down to 38.2. Secondary pivot, secondary target of the daily pivot. But if we do rally from here, especially above this swing high here at 18.02 30 then again, like silver, I might be thinking that this may be a running triangle, A, and then B. Even though this is a leading diagonal at the moment, it could be A, B, C is W, X, A, B, C is Y, right? So A, B, C, D, E, finish up. So it's just sideways, guys. And sideways means most of the time you probably shouldn't be trading, unless you trade on the very small time frame where you have some sort of little trend. But again, if you're trading on the 15-minute, don't be looking for what's going on the 4-hour. Don't be looking for 4-hour targets, daily targets, weekly targets on your 15-minute time frame, guys. Look for your 15-minute target. That's not a lot of movement. Okay? Scalping, short term. All right? I say that because, man, you guys keep doing the opposite, right? Let me see here. Crude oil, WTI here. Breaking down again this morning. I've got this still, same count here, kind of 1, 2. Well, let me see what I have. See, I've got a 1, 2, 1, 2, 1, 2. I'm not really happy with that. I'll have to go back in and check this. It could be a leading diagonal coming down here. So it could be 1 here, and then 2, as we got here, but just a leading diagonal is 1, and then 2, and then this could be a 1, 2 here, heading down further. So in either case, we would look for further downside. It looks like we'll probably get a bounce here, which makes sense. 1, 2, 3, 4, 5. We'll probably get a rally up into the 4-hour pivot here. We do have bullish divergence on the 1 hour. RSI, Stoke RSI, dip back down and oversold. So again, the idea that this may be 1, 2, 3, 4, 5 maybe. Maybe. We'll see. But what I'm looking for is if we get a rally here, I'm looking for a target of this area, either this swing high here, 90.65, up to the, the pivot area there would be where I'd be looking for that target, and then see if we can't get a new lower low off that. Again, the idea maybe we've got a leading diagonals of 1, 2, and then 1, 2 right here. So overall, still looking for further downside, but locally, I think we'll probably get a little bit of a bounce before it does continue lower. Natural gas. All right, futures, here we go. So we had this rally up into this 1 hour supply structure here right there at the R1 pivot. We did have a good reversal back off that. We had a doji followed by, at the R1 pivot at resistance, followed by the bearish engulfing. And then it just went down a little bit further, trying to rally back up here. We do have a lot of volume at the very top all of a sudden, right? It's volume spike at the top. So a lot of supply coming in there. 15 minute, let me see here. 15 minute, I could go 1, 2, 3, 4, 5, and then A, B, working on C here. Probably get up into this 15 minute here, maybe 9.3 or 9.27 to 9.3 maybe. But that would give us a 1 and a 2. That's supply right here on the 15 minute. Head down if we continued going higher up there. Right now, locally on the 15 minute, I'm looking for a breakdown below this swing low right here at 9.144. If we can get that, that should suggest that we're going down new low now, locally. And if this is done, A, B, C, which would make sense. Again, we're right here at the R2 pivot on the 15 minute. Got this nice doji up here. That would give us a wave 1, 2, 3 here at 8.727, 5 around 8.6. So, you know, if you're trading contracts, you know, that's what I'd be looking for. I'd be looking to go short on a breakdown there. Stop loss, of course, is the swing high right here. And then we're looking for a confirmation on a breakdown through the swing low. And then, you know, you're looking down here at that target. If you want to be safer, you know, look at maybe this is an A and this is a B and we're getting a C down. You would look to target 8.925 to 8.85, the 1 to 1.236 area. So it'd be A, B, and then C or C here. So yeah, that's what I'd be looking at. I mean, it's a decent bit of, you know, profit there you can get if you're shorting below 9.144 with initial target of 8.925, secondary target of 8.849. And if you're getting down here at 8.727, you know, that's looking much more like a 1, 2, 3 rather than an ABC. So yeah, contracts are a great way to trade, guys. Anyway, I think that's about it. Let me look back over here at Bitcoin, see what we're doing here. Yeah, still doing some sideways. Just so much sideways here. Doesn't make it a lot of fun to trade. I'm looking for a little bit larger time frame breakout or breakdown. Again, from where we're at, if we break down 23,511 followed by 22,964. If we break out above 24,362.04 kind of area, then I'm looking for 27,100 and you know, and then follow through up here, secondary target at 27,639.25. Oops. If, however, on the breakdown here, we continue to break down below 22,669, then I've got an initial target of 22,250 area. And if we break down impulsively through that, then I'm looking down here at, see here. Well, I don't know. I mean, I may look first right here at about 20,900, and then here at 19,800, 19,850. If we're breaking down through that, especially impulsively, then I'll be looking much more likely at the idea that this is an ABC, and we're heading lower, and in that case, I would expect this to be a wave 4, which gives us an expected wave 5 target at about 14,130 or so. But with that in mind, everybody's going to be looking like that. So I would be very cautious, checking to see. I'll look for 5 waves down and see if we get 5 waves back up. Because remember, you're going to want 5 waves down, 3 waves up, and then a breakdown with 5 more waves down to kind of get your 5 waves going, right? But if you've only got 5 down and then you've got 5 up, well, you know, up significantly into that, well then all you need for wave 5 is 5 waves down below wave 3. So it doesn't have to go here. Here's where usually we would expect it, but we could just get a little bit. I mean, it could just, you know, I don't know, come on down to this 16,300 level and leave everybody hanging looking for those lower lows. Just a short wave 5 and then back up. But those are levels I'm watching, you know, how I'm looking to do this right now based on this kind of particular account that I have at the moment. But taking into account, again, those other things, the daily pivots, high volume nodes, stuff like that, structure coming off the June lows with that. All right. So, yeah, there you go, guys. Now, you know, again, if we zoom out here, this is weekly, right? You know, I mean, if we look at this, we had 1, 2 before it rallied up, right? 1, 2 before it rallies up. Here, 1, 2 rallied up, right? So don't think you have to have some long drawn out sideways bottom thing. 1, 2 up. 1, 2, 1, 2 up, right? Potentially 1, 1, 2 up. right? So, don't necessarily need any kind of long-lasting, sideways thing on that. Right now, people are getting hurt. People are refusing to long, right? They're shorting into the rally that continues breaking out higher and higher and higher. And so, what that does, that effectively takes, supply off the market, which leaves it open to heading up higher if that demand is still there, if it's intending to go higher, right? I did draw these, a few weeks back, right? I think this one kind of moved a little bit. There we go. And so right now we've rallied up into this first resistance. If we break out and close above it, then I'd be looking for the RSI to target this next resistance here. If we break out above that, I think that's the big long-term picture that, hey, that bottom's probably in, we're heading up. So it's kind of what we're looking at here. But, again, guys, at the end of the day, we've got to break out above this area, which means we've got to break out above this swing high here. It's not enough to break out above the S1. You got to break out above the swing high right there above it at 32,383 and 96 cents. If we can break out above that, there's no reason you shouldn't be looking for this target area up here. Kind of this 43.5 to 47.5 kind of area. If you're breaking out impulsively above this swing high over here at 52,100, right? That's the swing high right above the pivot. You should be looking up here at 60,800 to 65,200 or so. And, so, I mean, that's, when you're looking at the weekly, that's what you're looking for. Those are the kind of areas you're looking for continuation up, everything else aside. So if you're not sure about getting in yet, watch those levels. If you're getting that, you should be up here. If you're getting this, you should be looking up here. And if you're up here, you should most likely be looking new all-time highs. All right? So hopefully it makes a lot of sense here. Remember, this isn't some arbitrary area we found support in. It's this area right here, all the way from over here. It's kind of this monthly kind of structure here, right? Here, you can kind of pull it up here. However you want to do it. It's this monthly structure right here from back at the all-time high in 2017. And, structurally, if we look at the monthly, guys, this makes a lot of sense, this area. It doesn't mean it can't come down lower, but look at what we're doing here. 2017, that was our all-time high, right? That's the area. We barely got to it, pulled back strong, right? And then rallied through it without even stopping. Cut straight through it. Hot knife through butter, right? What do I tell you? When you have this kind of structure where you just rally straight up through it, it usually comes back and retested as support before rallying back up. So just general structural movement, this is something we often look for as traders. Okay? We look for this. Do you get a clean, strong, hot knife through butter kind of breakout through that area of supply? Because if you do, you're expecting it to most often to pull back to that to test it as support. So on the monthly, again, makes a lot of sense that we would rally from here or a little bit lower here. You're not going to drop down in here to the 15,000 or so, but to basically find support in this area for rallying back up. Okay? So, just some things kind of looking at there. On the monthly, I'll get ready to go here, but on the monthly, we made a slightly lower low here on RSI, right? Come on. All right. We'll just do it that way then. So, again, that's from this point to this point up here. This swing low, 2018 bear low, to where our swing low is. That's hidden bullish divergence. Hidden bullish divergence is a continuation of the trend. So potentially looking at that building there. And of course here on the Stoch RSI, we bottomed out here and oversold. We've just crossed bullishly last month, this past month. And so here we are trying to continue that and pull out of there. So, on those higher time frames, a lot more stuff that we're kind of looking at on that versus everybody getting tripped up on the 1 hour, even the daily kind of, oh, it has to definitely go down thing, right? Again, could go down. But most of the time when you see the structure, this, either it'll hit it and pull back and then break out, or it'll sail through it, pull back to it, and then go. Either way, it tests this as resistance support. Boom, 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 or boom, boom, potentially continuing up. Okay, guys? Oh my gosh, spent so much time today, but as always, remember the only thing you control in the market is how much you lose. So please keep working on that risk management. Don't forget, we've got our signal services there. By the way, if you don't want to take us up on that tier 3 offer, you can still get in on our signals there. Just go to howtotradetowin.com and join us link at the top, and then just pick your poison. You want crypto, you want stocks, or do you want FX? And that'll get you in there, and then you'll be set to make some money with us. If not, hey, we'll be here on Friday, right? Same bat time, same bat channel. Can I get the cease and desist order now from the estate? Oh man, people are funny. Anyway, yeah, 11 a.m. Central Standard Time on Friday. We'll be back here. Check out things are going all right. All right, guys. I hope you guys trade safe. Y'all have a great week. Like I said, take your time. Don't be trying to jump in immediately. Look for validations. Watch for invalidations. I've given you what my levels are on here and where I'm looking. None of it has to do with the 15-minute time frame, right? All right, guys. That's right. Remember, get off my lawn. All right, guys. Y'all have a great day. Take care.